talk, and they will put it on, like, just to tell them that we are about to start, and they will hear it.
Okay. 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 Good morning. Thank you very much for joining this panel discussion. My name is Jelena Madir. I'm a chief counsel in EBRD's legal transition team, which focuses on legal and regulatory reforms in EBRD's countries of operations, including in the areas of fintech and blockchain. Earlier this month, we published a study on smart contracts, which provides a toolkit and a roadmap for lawmakers and regulators who are looking to use smart contracts in their systems, and the paper provides a roadmap for the types of legal issues they should be thinking about if they want to create the environment that facilitates the use of smart contracts. Blockchain has become an inescapable buzzword for the last few years. Proponents contend that blockchain will affect and possibly disrupt every major industry. And in the past 2 years, this is an interesting statistic, we've seen more than 500,000 new publications on blockchain and nearly 4 million Google search results for blockchain. Interestingly, many of EBRD's countries of operations are leapfrogging more developed economies when it comes to the use of blockchain technologies. In Ukraine, the e-governance agency has been looking into using blockchain for greater automation and digitization of government services, and the National Bank and Ministry of Finance have been grappling with the regulatory aspects of cryptocurrencies and other crypto assets. The question remains, however, are we at the pinnacle of history-altering technology that will drive massive economic and social changes, or is blockchain perhaps the latest technology buzzword, in other words, more noise than substance? So to answer these questions and to update us on the latest developments in Ukraine, our esteemed panelists, starting from my immediate left, we have Michael Chobanian, who is the founder and head of the Blockchain Association of Ukraine and founder of Kuna Exchange, the first Bitcoin agency in the CIS region. Next to him, we have Alex Momot, who is the founder and CEO of REMME, a company that provides user authentication tools instead of passwords, which, as we know, are very vulnerable to cyber attacks. Then we have Andrei Kirilenko, who is the director of the Center for Global Finance and Technology at the Imperial College Business School in London. Next to him is Antonina Skrypnyk, who is the head of the Fintech lab at SoftServe. And finally, we have Poberezhna, founder of Smart4Tech and head of products at Fiverity, which provides integrated innovation solutions in the areas of water and finance. So the plan is that we'll discuss a few questions amongst our, and then we'll open up for questions from the floor. So I'd appreciate it if you could keep your questions till the end. We'll leave plenty of time for questions. In addition, Chatham House rules apply. You can use the information received during this session, however, without attributing it to a particular individual. So let's start with the basics. Now, given its complexity and cost, what do you think makes blockchain technology a uniquely qualified tool to solve a particular problem? And in your opinion, which sectors in Ukraine are the ones where blockchain will make the biggest impact? Would you like to start, Michael?
Sure. But before we start, can we do a quick survey?
Of course.
Yeah? My question is, who ever used or tried any cryptocurrency wallets ever? Just raise your hands. Okay, less than half. And that's the problem. That's the problem. You said that there were millions of publications. Mm-hmm. So a lot of people are aware of cryptocurrency. They think that they know a lot about cryptocurrency, but they have never tried it. So it's a theory without the practice. I mainly work with the practical side rather than theoretical. With regards to your question, the answer would be, in my point of view, the ideal situations where blockchain can be used is where there is no trust or where there are systemic problems. if we're talking about Ukraine, it's first the government. We don't trust the government. If you look at the rankings of any government body, starting with the president, ending with the judges and courts, well, the maximum you'll get probably about the 4% or something, less than 5%. So obviously the obvious use case would be blockchain for the government, especially for the public databases. But this technology is uncomfortable for the current regime or any other regime which uses country as the source of private wealth, let's call it that way. So I don't think that we're going to see any blockchain solutions on the government level for the next year, at least, because now we're in the presidential elections and then we'll be in the parliament elections, and we don't know who will be the president and what the coalition in the parliament would be. So I don't expect any solutions on the government level, unfortunately. But there will be a lot of buzz, and a lot of presidential candidates use blockchain word to stimulate rankings.
Any other sectors?
The sectors regarding where it's already used is banking. We don't trust banks as well. There are, different reasons why we don't trust banks. We don't trust national banks. So the blockchain, and namely Bitcoin and cryptocurrencies, is the way to go. And if you look at the amount of people who use Bitcoin as alternative to traditional banking system, then Ukraine would be in the top probably 3, if not number 1 in Europe. The reason for that is, again, we have the poor banking system. We have strict capital controls. You can't easily buy foreign currencies and send them abroad. And Bitcoin can solve this problem, and it solves it already.
Alex?
I can only add a few words that yes, blockchain is the only reliable source of trust, and we could use it as a source of trust for any industry that needs it. And in addition, it's financial sector, like Michael said. And most important from our point is security, because you could use it for providing only secured way for storing data, because you could encrypt data, you could share it, you could transmit it without possibility to lost the data like we have in right now in the world with Facebook leaks and all of that hacks, recent hacks. And with time we will have certain services that would allow usual people, regular users that now far from blockchain to have several possibilities to use solutions even when they will don't know that blockchain used as a certain layer inside of the solutions.
Andrei?
Yeah, I'd like to maybe touch a little bit about why blockchain is interesting to an economist. And it's a digital technology that solves the problem of scarcity. It's very easy to copy a digital object and create an 100% identical copy of it. And so you wouldn't know which one of these is the original one, which one is a copy. And if you can copy it at basically zero marginal cost, you can create millions of copies. So it means that scarcity in the digital space is a problem that's very difficult to solve. You can take the same image, you can take the same program, you can take the same lines of code, you can copy it, cut and paste, and it's yours. And what blockchain does is that it creates digital scarcity. It creates an object that's scarce in a digital space. What people describe as trust comes as a result of that, that now you have a golden copy to which you can point to. Now, once you have scarcity in a digital domain, which is digitally native, you can put value on it, you can put risk on it, you can start conducting economic transactions on it, you can start exchanging it, and you can use it for transactions that are valuable but not necessarily denominated in monetary terms, such as corporate voting or political voting, such as holding of records. There's a very, very valuable because they're supposed to hold that value, but they're actually difficult to denominate in monetary terms. You can put tokens on it and various other assets. I would say that when I think of cryptocurrencies more and more, I think that cryptocurrencies, original cryptocurrencies, are really the first opportunity to gain a financial exposure to blockchain technology. There are other opportunities to gain financial exposure to blockchain technology that are being developed now. And so I think that technology in the digital scarcity space is what's interesting, and how you gain exposure to it is what's just sort of people are experimenting with.
Thank you. Antonina.
Yeah, so I would rather like to turn the discussion a little bit to the other angle, so that blockchain is a technology and it is already here, and this is a technology that is absolutely country agnostic. So I would rather not talk about the problems of adopting blockchain in Ukraine because we have specific problems with trust and something politician system or something like that. I think that the whole world operates according to the same rules, and blockchain is the technology that can enable social interactions in any country. So there is no specifics in Ukraine particularly. And what is blockchain for? Actually is for managing the uncertainty between the market players, no matter what is the country, no matter what is the domain, the industry, and what is the sense of these social interactions. So this is about enabling the trust and enabling the transparency and having the real-time snapshot of all the transactions in the system, whatever the transactions are. So I would rather say that this is a technology to be leveraged in any type of the social interactions in any country. And Ukraine is not some outstanding or particular example of that. So a part of the global economy. And blockchain is the technology that is still evolving and still searching for the very disruptive business cases to evolve. So we do have a lot of applications, and guys already started talking about that in different industries, starting from fintech to healthcare and the political sphere and others. But still, they are, a pretty obvious use cases. And as for now, we can say that there is still no one single outstanding use case that turns this technology to be a disruptor at the whole global market. So yes, it enables the transactions. Yes, it definitely enables the transparency, the trust, and the cost efficiency. But this is the very one and obvious usage of it. And we are still we are still here to find the very specific application of this technology in some specific domains and industries. So this is what we have to do with that. We have to leverage our experience to find those super outstanding applications with that. And for that, we do need people and resources. And we do need to develop the technology on and the regulations concerning this technology for each of the countries who want to leverage this technology.
Okay, thank you. Anna.
I would break I would summarize this points about blockchain introduction into three things: area of application, type of application, and industries. So areas of application is network management, what it means. If you have a network where the transactions and assets need to be managed in a more efficient way and a transparent way, that's yes. Blockchain acts as a notary as well, so it's a proof of all different things: proof of authority, proof of trust, proof of any sort of thing you can think within the specific type of domain of the problem. Type of applications, so it can be, we're talking here about the different blockchains. You have permissioned, you have permissionless blockchain. I work mainly with a permission blockchain, so it's a private consensus has to be there. And what we're talking here is post-trade management, it's data reconciliation, it's a supply chain transparency. And industries, what we're talking about, it could be finance, it could be all sort of supply chains, chemicals, water, it can be gas and oil, and this is where actually I started, oil and gas trading, and move into water sector, and I brought actually blockchain into the water sector globally, and right now we're working in the fintech and waste trade finance. So you can see there's a number of applications, but again, I wouldn't approach any sort of problem as like, what is blockchain and how it's going to solve the world problem. We would need to define the problems, then we need to define the architecture and design thinking, and then we think what kind of instruments we're going to use. And blockchain is not a silver bullet point here, and it's just one of the instruments which will evolve over time. It's still very immature, And we see a lot of issues right now in the scalability, privacy, interoperability, but we're getting there.
Yeah, we're going to get to that. So it seems that many companies are trying proofs of concepts and pilots. Are you aware of any examples in Ukraine or elsewhere, perhaps, where companies have indeed already used blockchain technology in core business processes? And if I understood what you said, Antonina, correctly, you're suggesting that perhaps there still aren't any concrete use cases of.
Actually, they do exist, and it is a few months ago, the BBVA bank, the global Spanish bank, announced that they have launched the based on blockchain platform for investment loans management. So they have already issued a few huge multi-billion loans using the system. So there are existing already the use cases, absolutely. We have a huge investment from the big players at the market into their private networks. So this is the IBM with Fabric, and with this is the Sotus with the Intel support for $4 billion already, right, invested into this platform. So they do develop the networks, the environments. So that would be the basis for developing solutions. So there is no economical need in developing your own private network, always. I mean, just at every case. But you can use that one that already exists in the market, right? And based on that, develop your use case. But the use case is already in logistics, in supply chain, like Anna just said, in pharmacy also. We do have and we were also involved in such projects. We have done already a few successful projects with tracking the diamonds supply chain, tracking the logistics supply chain, again, the origination of the products and the goods. That our products that we can buy are produced from. So we do have applications. The very successful one is you must probably know about that Republic of Georgia. They have launched the project based on blockchain for registering the deals with the real estate. So this is the e-governance, right? We have the solutions that would be probably realized in Sweden. That would be again, the e-governance and the elections and voting. We do have information about the investment into smart cities in Dubai. So combining the blockchain and IoT solutions for developing the whole ecosystem of the smart city. So the applications, they do exist, and the blockchain is already the part of our lives. And we we as a company already have a lot of successful cases, and even for huge market players, POCs, MVPs, even we have even developed the invoice trading exchange 3 years ago already, when blockchain was not really a hype yet. So we did develop such a case. So there are use cases. You just have to be when you have the conversation with the customer, the client, or just in the industry, you're just talking about, well, I would like to have blockchain in my solution.
Yeah.
You just have to start with the question why.
Yes,
not
indeed.
starting with doing the implementation. So this is the proper approach, not only delivering, but giving the consultancy services to support the business with the proper shaping of the value proposition and the business case for their solution and for their idea.
Indeed, yes. So Anna, you mentioned water as a sector where blockchain is being used, and you're working on it. What is the use case there, and how far along are you?
Well, that's a very interesting sector, highly political, I'd say, far more political than any cryptocurrencies and currencies, and highly regulated. There are developing use cases so far. Nothing has been in the pilot yet, so this framework, first of all, has to be delivered within the policy, within the water governance, and within the water management. And it's highly fragmental because you have hydraulic systems, you have physical supply chain, which is very difficult to convert into the digital, and there is nothing to do with blockchain yet. What blockchain can bring there as an added value, it's transparency and proof of water quality in a number of regions where population cannot trust the quality of the drinking water, and we have usually a lot of issues within that specific area. And then the second point is water efficiency. So how to optimize water efficiency given that we have water security, energy security and food security issues. So it's part of the nexus paradigm, and that's coming from that side. But I would like to mention that despite the pilots and POCs, like it's happening in other sectors, it's going top-down approach. So it's coming down from the top water governance, OECD and other large international organizations with whom I have to deal.
Thank you. Andrei, are you aware of any concrete use cases where companies are using blockchain in their core business processes rather than just using pilots and proofs of concept?
Could I talk about the pilots instead? Because I have a very exciting pilot that I just observed. So I was just a judge at the hackathon here in London, organized by Barclays and the International Swaps and Dealers Association. International Swaps and Dealers Association is a sort of industry association of dealers of swaps. So swaps is about $600 trillion notional business around the world. Massive notional exposure. Swaps are complex instruments. There are different types of swaps, and they're basically exchange of value for value. And for a long time, trading of swaps it just sort of took place, but post-processing of swaps, in particular swaps that do not go into clearing, was sort of difficult. It had to be done in a very cumbersome way, an expensive way. And so ISDA came about with an ontology of how you represent digitally this flow of payments basically underlying any swap. It could basically be represented as a flow of money one way or another, or various events that are associated with it. Then they held a hackathon where they invited, in New York and London simultaneously, where they invited teams to implement this ontology onto their, using their technologies. It was a primary view of blockchain technologies, but not specific to that. You could implement it in any, you can implement it in an Oracle system if you want. So about 30 teams participated, and I was really astonished to see just how much activity is in this space. I think what I did not realize and what I noticed is just the number of people working on it globally is huge. It is just incredibly active. It may go in and out of the news cycle for one reason or another, but I think the community that's working on it, both at the science level, at the level of implementation, at the level of large financial institutions, very large. And that, I think, is well beyond hype. I think the adoption is continuing. In this particular case, the team that won the hackathon was it was lasting for 48 hours. They implement all the use cases using their modeling language. It's 3 hours, everything. So they implemented the entire ontology, all the use cases, the entire representation, clearing different events, everything. So that's how good some solutions are. And now they're in discussions with basically global association of swap dealers to move it forward. Now, it may not it's really nerdy, and it doesn't necessarily easily hit the news cycle because it's kind of like, really digital representation of swaps. But it's big. Global trade is another big one. Global trade moved well beyond proofs of concept. There are now provenance in global trade. Global trade is complicated. You have a shipper and receiver, you have owner, you have cargo, you have insurance, you have financing. They have to have access to a set of records that they have permission to have access to only for their specific purposes, but they all need to know where that ship and that cargo is. So that's well beyond proof of concept. That's operational.
But interestingly, even with the digital representation or tokenized assets, you still need to physically move assets in order to transfer ownership, right?
No, swaps you don't.
No, swaps absolutely, but what about houses and, you mentioned trade finance? Still,
That's a very interesting point, actually. That's a very interesting point. When I look at applications of blockchain, I think to me the most promising ones are the ones that are digitally native.
Sure.
Because
like
if you have a digitally native representation of a digitally native object, that creates a platform where where it could really scale up. If you have a physical something in the physical space which has a digital representation, that does not have the Moore's law underneath it. You know, I mean, you can have diamonds, but diamonds are scarce, and you can have scarce digital representation. It makes sense, but it doesn't just go whoomp, right? Whereas if you have a software development project that runs, that develops some sort of a platform for something around the world, and you can tokenize it, and you can bring in a lot of talent into it, sort of makes more sense.
Alex. I reminded myself about the two, maybe that would be interesting for the audience, about the two real cases, not from Fintech. The use cases of where blockchain was used successfully. And this is you probably know the initiative of the United Nations and the Red Cross about the call for code. So this is the 8-chain initiative globally when they involved you were talking about the hackathons, so this is some kind of part of the social responsibility global when this United Nations, the Red Cross and other organizations, they call for volunteers for volunteer developers to contribute their efforts into developing solutions to help decrease the influence and the impact, the negative impact of some natural disasters. So we were part of this initiative. We contributed to there also. So what was the use case? And this is the working solution. This is not a POC. So what guys did? They've created a solution for a blockchain solution for tracking and monitoring the process of delivering the aid by drones to the specific areas after the Catherine hurricane that happened in United States. So there were regions, locations where people were injured somehow with the negative impact with this disaster, but the roads were, crashed, and they could not get the aid from the government. The helicopters were not able to reach them. So the solution enables to including and embedding the IoT solutions also. So you have the drone flying with the aid to some specific location. You have absolutely transparent information about the logistics, about all the transactions, about the actions in the system, when the drone lands, when it goes up, what is the package it holds, what is the package, where was the package compiled, how it was purchased, by the amount of money that volunteers are donating. So you have a transparent information. The whole supply chain for this solution covers the whole journey of the aid that the person gets. And the issue, I mean, the notice, the transaction is closed when the drone delivers the aid. So this is the whole, from the beginning to the very end, the whole journey of some specific value that people receive. And the other, and this is the live project. They do use it for the
aid tracking.
Yes, yes. And the other one might be the solution for the insurance companies. For as far as I know, the alliance, the global insurance alliance, they invested into developing the solution of tracking the claims processing, so insurance claim processing. So smart algorithms as the part of blockchain solution enable you to have the very cost efficient and very transparent, and again very time efficient processing of claims. So you don't have to call for the bank, you don't have to call for the help center to ask for your money. You provide the documents, the smart algorithms, I mean the blockchain solution, the smart algorithm, they just validate what are the documents you have provided. The moment you provided everything, the smart algorithms conducts the transaction, and the money is withdrawn from the account of the insurance company to yours. So this is again the transparency, this is the managing the uncertainty, and this is again the cost efficiency and the time efficiency, and the decreasing of the human risk factor. So this is again the other solution in other domain.
Alex, are you aware of any concrete use cases beyond pilots and proofs of concept, ideally in Ukraine?
Yes, but mainly they came from crypto industry. For example, I know several companies that use smart contracts based on Ethereum network for making payments, and it is much more effective than using traditional banks. For example, of course, we have several problems connected with exchange rate, but in sense of transparency and effective management, it is better because financial department could issue transaction and another administrator could approve it using second private key, so second signature, and the manager of the company could only control that everything will be done properly. And for checking the status of funds, for checking the status of transaction, it is only needed to use a blockchain explorer using traditional, usual web browser. And when we talk about banks, we know that we should ask bank for some sort of documents for checking all of that, and any kind of audit with a blockchain-based system much more effective and faster. And it is no possibility to make any fake transactions or change something in the past. So it is much more suitable for such organizations like crypto companies. Of course, for traditional world, it's several drawbacks in such systems connected with exchange rates, with connection to traditional financial industry, because banks do not try not touch anything connected with crypto. And of course, during last months and even years, we can see initiatives about making proper laws, and companies or countries like Malta, Gibraltar, Singapore trying to change their laws to start working with crypto companies. But I think it is better to stay only in crypto right now for our company and for similar crypto startups, crypto companies, because without banks it works much faster, reliable, and secured than in traditional finance.
Michael, any use cases beyond cryptocurrencies?
To be honest, I think right now the only use cases are targeted in banking system or financial system, or both. The rest, I don't really see any examples, maybe apart from the Alex's project, which targets security. But right now I see the most development and the actual revenues which are coming in, they're only in the banking and financial sector. So.
Okay. All right. Well, I'm going to pick up.
The rest is theory.
Okay. Well, we've heard concrete use cases from Antonina, right? Tracking of insurance claims, tracking of aid, right? Those are concrete use cases, possibly. But in any event, I mean, yes?
I think there are two types of use cases that were brought up. One type is sort of cost reduction type of use cases, where it's applied to reduce costs of something that otherwise is costly.
Yeah.
And another one is when there is a catastrophic failure of an existing of a previous channels. So let's say you have a natural disaster on a massive scale. Police doesn't work. Roads are not working. You have to deliver that. So it's a whatever previously available channels you have operating under normal circumstances are no longer working. And so similarly, if you have a catastrophic failure in your banking system, you have a catastrophic failure in your currency, a catastrophic failure or possibility in your political system, this particular digital tool has applications, whereas your existing tools fail. And so along those two, you see proofs of concept in both. And in one case, the cost reduction aspect in the catastrophic failure example, the cost is a minor point because you have to solve a problem, and that's the only thing that can solve it. That's around, that would actually be trusted. In the other case where you see cost reduction, you need to go through the usual thing, and people say, well, you need to demonstrate to me that you're actually reducing the cost meaningfully so that it could be adopted, because overlay was going to be this and that. It's a different type of conversation. I would probably, and cryptocurrencies again fall into the probably first category, where there was global financial crisis was a distrust in the financial system, and therefore these things came about to solve a problem because of that.
Yeah. I would say in a typical innovation cycle, you start off by looking at the customer value proposition, and the next step is to look at business requirements to achieve that proposition. And then the last thing typically on your list is to look at the type of technology that you need. Do you think that in the case of blockchain, we are reversing the process a bit, and many companies seem to be saying, we absolutely need to have blockchain, and then let's see what we can do with it?
What kind of blockchain? What color of blockchain do we need? So it's not a proper type of question. So usually during the first hype, maybe a few years ago, a lot of companies started to use technology because of technology, not because of solving the particular questions. But right now, I think after initial hype is over, during the next few years, we will have a proper investigation about particular use case, and after that we'll have a solution for that. But we need several bridges to be built between blockchain world and traditional world. For example, insurance, because right now when you talk about blockchain world, we have the rule that code is the law, and for regular world, that principle is not applicable. Because for bank, for example, they need some sort of partners that will be reliable for certain activities and certain problems that could emerge. And if you talk about blockchain, it's impossible to have if it is a real blockchain with a proper governance, it is impossible to have some sort of companies that will be reliable for it. So we need, for example, insurance company that will have some sort of fund for guarantee of mistakes that could happen in consensus algorithm or in any kind of types of mistakes that could happen around blockchain in that company, in that system. So the insurance company will pay instead of blockchain and instead of company for that to third parties that is use services of that blockchain. Or we need another bridge that is connected with the traditional fiat prices, because companies want to see a price in US dollars or in pounds or in any kind of currencies that is understandable for their internal systems. And when we talk about blockchain world, it is hard to say how much you're going to pay for transaction in Bitcoin in a few years, because nobody knows which exchange rate will be there, which transaction fee will be, and so on. So for that, we need those kind of bridges that will make a price in fiat currency, and company will pay in fiat currency. But between blockchain and this payment, we will have a mechanism that will, we call it Oracle, that will make a proper exchange rate for making fiat payment actual or working in blockchain world.
Anna, do you think that companies are indeed looking properly at problems that need to be solved and considering different types of technology? Sure, blockchain could be one of them, but perhaps there are other technologies that would be more suitable. Or are they thinking, do you see that in the market, many companies, given that so many people are working in that blockchain, it almost suggests that perhaps people think we absolutely need to have blockchain, and let's figure out what we can do with it?
I think people are enough educated, at least here right now, especially within the Fintech, within the supply chains industry, and the health tech as well. So basically, we're talking about the registries, we're talking about the supply chain transparency, authenticity, anti-fraud, and other applications, where it's no longer the question, do we need blockchain? It's a question about the architectural design of the solutions, and what are we trying to achieve with that solution. That will be the key question. And in terms of the instruments, there are a lot of legacy systems at the moment within the large organizations. And what has to be done first, we're not talking even about blockchain here and putting records and transactions or assets on the blockchain. off or on ledgers, but we're talking here about how we're going to transfer data into how we manage data, how we develop the data strategy, and this is the right angle of application. First of all, how we're going to manage data, what we're going to do with that data, what we're trying to achieve with that data, and then we're going to think about certain tools, including blockchain. And right now, it is still a point where we're trying to transfer a lot of legacy systems into advanced cloud systems, not even in blockchain. There are hybrid systems, and certain companies experiment in that, and we can see successful consortia. We can see VACT, we can see right now WeTrade, we can see some other ones where large banks, large traders participate in that, whether it's commodity trading, whether it's financial institutions. However, again, we need to think from the perspective we're trying to achieve. Is it improvement efficiency? Is it cost reduction? Is it transparency? Is it anything else? And blockchain can be applied where it's either high value of the assets, a high value of transactions which need to be reduced, and to bring in the network effect, and we need network participants. Otherwise, it's just improving one operational process or value chains within one particular company.
Michael, you said that much of it is still theory. So in your opinion, what type of groundwork is still required for blockchain to enter the mainstream and become more scalable?
First, we need to identify what kind of problems we're trying to solve. And that's the main problem, already noted by the panelists, that most of the companies want blockchain because it's cool, instead of trying to solve the real-time problem, real-life problem. So first, identify the problem that it's going to solve, and then identify whether blockchain is a suitable solution for that. So again, on my previous point, I think right now the only markets where the blockchain is suitable technology is banking and financial markets, because there you have the transition of value. Well, most of the money right now, well, currency in the world is digital, it's not cash. So therefore we have the transfer of values across the borders. And there are no borders for the blockchain. There are no borders for the Bitcoin or cryptocurrencies. So, for example, we had the brief discussion with Mr. Utkin. He has invested in one of the projects where it's a social platform, and they have built-in cryptocurrency, which represents time. And here the blockchain is ideal solution, obviously, because blockchain provides transparency. Blockchain provides, out-of-the-box solution how to, create money, how to manage them, the wallets and everything, so user experience. So that's the ideal solution. Then again, stable coins, that's the new notion which happens in the world. Stable coins, it's basically a token on the blockchain. It could be public or private. Usually it's a public blockchain. It's a token which is backed by some kind of asset. It could be currency, it could be, precious metals, it could be diamonds, it could be whatever. And the reason why it's stable, because it's backed one-to-one to that asset. So that's another use case solution, how to use blockchain, create the national stable coins. So crypto dollar, there are several projects now, crypto euros, crypto pound, crypto hryvnia. That kind of projects will rise. And the reason why we need them, because it has API. Do we have API for British pound? No, we don't. Do we have API for US dollar? No. The maximum we can get is API from the bank, which has accounts in US dollars. But that's a different story. Again, it's centralized. It's limited by what the central bank allows them to do, and so on and so on. With the stable coins, you just have open API, which allows you to do pretty much everything with your assets. So you can create a wallet, and it could be used in different projects. So I think that would be the next big thing, stable coins.
Right. I mean, scalability or lack thereof has been cited as one of the main obstacles to the mainstreaming of blockchain. What do you think, Alex, needs to happen for this to be
First of all, I think after initial survey of Michael, we need educational events. After that, if you talk about scalability, the problem of scalability is that usually people try to use blockchain in a not appropriate way, because a lot of companies trying to use Ethereum blockchain for making any type of transactions, and it is not needed usually, because it is better to use blockchain only as a source of trust and making all other transactions outside the blockchain. But in Ethereum, as a first experiment, like Vitalik Buterin, its founder, called it, it's only first tryings of how this kind of platform for all world could look like. And we need to wait until next successors or next type of projects will come, for example, EOS or Cardano or others. They're trying to solve problem of scalability in another way, because right now Ethereum is too big to fail in crypto world, and they try not to broke something inside of concept that is working right now, and that's why the speed of development is not so high like at the beginning. So I think during next 2 years we will have different specific blockchains for certain use cases. For example, ours will be used for authentication, and EOS will be used for high-load enterprise use, and several others for certain others, and we will have interoperability between these blockchains for connecting all of that blockchains in one big, and it will be a lot of other different developments that will change the projects or the world face much more than today.
So Andrei, with so many people working on blockchain, what's preventing further development of scalability?
It's hard to understand. It really is, because blockchain is like amazing for computers. They love it. They really, really love it. But for humans, it's just really complicated to understand. You have to put yourself in the mind of the computer and then figure out why is it working in a certain way. And I think that's the main thing. But I'm moving. I started teaching blockchain about a couple of years ago. I think there are ways to teach it. I think there are ways to explain it. But hands-on is the best. So I'm moving one of my research projects onto a blockchain, completely sort of for the purpose of having my research colleagues who are working with me on it be exposed to it. Now it's a research project. It doesn't have commercial value, and it's not for the sake of saying, oh, I have a research project on the blockchain, but it will be done in the context of a sort of modeling language that is particularly applicable to a permission blockchain, and has different pieces of data, and it will have different researchers working on it and different outputs with different permissions. And I actually kind of disagree with the idea that first we need to find a use case, and then we need to go, and see whether something works. Just experiment. I mean, the technology is open source. It's not, it's hard to understand, but it's free to use, really, honestly. So it's not like, but that barrier to using it is quite significant. Mihailo mentioned stable coins. One of the things that stable coins do is that they actually potentially could solve the problem of people actually opening crypto wallets in the first place. Because first they want to open crypto wallets if they also want to trade in cryptocurrencies. Well, you don't necessarily want to commingle it. You say you can open a crypto wallet, you can now move your stuff in and out, but it's as if you are actually trading in whatever you're comfortable with. Now you solve that first problem, you have more people opening that, they use it, they see it's not broken, they see that it's easy, it's on their phone, it's operational, there is transparency. They're like, maybe I move on and do other things with it. So breaking it up into parts. I think the early adopters have adopted and run with it, and then regulators have caught up with them and slowed them down, and now there's a little bit of a gap when others are adopting and using it for different purposes.
Antonina.
Yeah, I think that we have a very interesting panel discussion in here because we have representatives of absolutely different dimensions, right? We have representatives of the educational part, people who work with the methodology and just making a deep research. We have people who are representing the very research and very practical applications and business side. And client side, so we commit for what we deliver for our customers, right? And we have people who develop the methodology and regulations for in communities for blockchain. So you see that we have a little bit different angles and views on the same point, right? So as for me, I don't consider blockchain technology to be a rocket science, and we have established our own centers of excellence inside of our company a year and a half ago, and we do have brought up already a whole generation of developers who are keen of this. Who are keen of this technology, and they are able to deliver solutions with that. So this is not so hard as it seems to be. So this is just smart guys with smart brains, and this is like the support from business with the real use cases when you understand that they will bring the value for the customer. So this is not so hard, but still we do feel this is the part of the answer for your question about what are the obstacles for a deeper adoption of blockchain in economy. So we do need the resources. We do feel the lack of the resources to be able to align with the amount of the demand that we have at the market at the moment, and this is one part. The other obstacle we feel is that the regulations, right? So, and the result of that, a little bit, the fragrance of the fear of the huge market players to touch this technology more deeply and to embed it into their operational activities in their core business, because they would rather touch it a little bit with the POCs, MVPs, and something like that, and then see what, just to be, you know, at the same boat with others, with those huge market players who are investing billions of billions in this technology. And just to be in the same boat with them, to feel the technology, to have something with that in their business, but still not to be, you know, too risky and too deeply into it. So this is a little bit of the fragrance of the fear, why the blockchain is not totally being adopted by every and no one is so quickly and eagerly invested into that in their core business applications. So this is the other one. And the third one, obstacle, is again the regulations in different countries and the approach. You know that the trend is about the open banking in Fintech, the open API. And so I think that the future for this technology implementation, I mean the deeper adoption, would be the biggest amount of the market will grab the one player who will be the one to integrate the different types of blockchain environments, because they are being developed by different market players. We already have said that, right? Different systems. Ethereum, Hyperledger, Roha, and just a lot of others. So in the future, as far as we will have a lot of such environments, a lot of blockchains of different types, so that you will have to integrate all of them into your solution if you want to grab the biggest to penetrate the market with your product that you will develop based on blockchain. So I think that the very future for disrupting really the market and grabbing the biggest part of it would be being able to integrate with all different types of this blockchain environments. And maybe this is also one of the reasons why the penetration is a little bit slower than we would like it to be, because everyone is trying either to use these two super huge giants, Hyperledger and Ethereum, right? Open source, I mean, or they are trying to build their own, but very, very much smaller environments, private environments. And so, again, the penetration in this case is lower for the market. So this is, you know, always the balance between two of them.
Yeah. Anna, anything else you want to add as far?
Great summary. We're just part of the learning curve, and the baby has to go through 9 months. If it's 7 months, well, it might have some complications. If it's 5 months, even more complications. So that's a part of the learning curve, and there are many parts of that which have their impacts in that.
Now, both Antonina and Andrei have touched upon regulation. So in your opinion, what type of regulatory environment is necessary to facilitate the use of blockchain? Should we go the Chinese model, which is very permissive, or perhaps other types of regulations which try to protect consumers, but through that perhaps they are stifling innovation? What type of regulatory environment is ideal? And perhaps, Antonina, since you live in Ukraine, can you tell us a bit about the latest developments and thinking of Ukrainian authorities in relation to both blockchain and cryptocurrencies?
You know, actually, the regulations is a huge issue in here. And we have to keep in mind, I think maybe that would be even not me answering this question more, because guys are more deeper into the laws and the legislative part about supporting of the blockchain and cryptocurrencies in Ukraine. But from the business perspective and the technology perspective, the regulations, I mean, we do have GDPR in-house already, right, in Europe. So we do have PCI DSS compliance regulations. We have a lot of regulations in different locations, in the world. And you have, if you are building a global solution, you have to be able to align to each of them and to be compliant to all of them. So you can't store sensitive data inside of the blockchain. So when you are developing the business case, you have to keep in mind that the architecture of the solution has to store the data out of the system, and to, just a lot of, like Anna said, a lot of things in influencing how you work with blockchain solutions. Blockchain solution can be used for storing big data from the very origin, because this is not the storage actually. This is for about the other purpose, the other reason. And that is also influenced by the regulations with the processing the data and the way how you organize the environment for your solution, right? So, but concerning the Ukraine, I think that the guys would be more deeper with that, with the laws that we have already in the parliament, right? You were just saying about that.
Michael.
Yeah, so my view on this is that you don't need any regulation for the blockchain or the crypto, because code is the law.
That would be an ideal world, right?
Yeah, exactly, because it's a free world. The whole idea of blockchain is freedom. You don't have to ask, permission or ask questions to anyone. You just take it and you do it. And that's the whole point of the blockchain. It's an open API. It's a technology of the freedom. And artists are free people. And if you put artists in the, small room and you say that you can only draw with the pencil and you can only draw trees, in that case, we won't see Picasso's. We're not going to see, Salvador Dali's and other.
Lots of statues of Lenin.
Yeah, and you'll see a lot of statues of Lenin. Very true. So my point of view, there's,
artists are not impacting
my money, right? So
yeah, exactly.
I'm still the representative of the fintech and the customer business. I'm from the customer side, so
again, you're talking about the traditional world. Crypto is a parallel world. I live in a parallel world. The only time when I actually touch the real world is right now when I'm sitting here. But all my business is in a parallel world. There is no government in my business. And you said that we are like community, but we'll end this year probably with a turnover close to $300 million. And this is all in crypto. I don't touch fiat money, all in crypto. All my employees, they get salary in crypto. All our costs are in crypto, or our revenues in crypto, and it's real money. If I want to exchange them, I can exchange them and get dollars wherever. And this is the point where we need the regulation. Because obviously, when you spend something or when you buy something, the government is going to ask you a question. Where do you get the money? And you can say, I earned it on Bitcoin, I mined it or wherever, someone paid me in commission. It doesn't work with the IRS. It just doesn't work with the tax services. So the reason why we need the regulation, two reasons. First, explain how you can pay taxes. Because right now in Ukraine, there is no law which describes how you can pay taxes from the crypto. If you look at it like from the point of view of people who work inside the IRS there, they'll say you have the revenue, so in that case you just have to pay standard revenue tax, which is 18%, plus you have the war tax, which is another 1.5%. So 19.5%, this is what you have to pay, doesn't matter where you get the money from. It's not like, you know, really good thing for crypto people. We, you know, prefer to pay nothing. That's why we proposed a law which will say that you have to pay 5% from all the incomes which you get from the crypto if you can't prove where you got it from and how much you bought it for. So if I just show up to IRS and say, here is my $1 million in crypto, I just exchange it, I just pay 5%. If you have the proof of funds, so for example, you I don't know, deposited $1 million to the exchange, then you played on the fluctuations in the exchange rate, and then you got 1.1 million out of the exchange, you only pay 5% on this 100,000. The first reason is how to pay taxes, and you have to pay taxes.
Not
you know
that,
what
but
happened.
How do you classify some of the crypto assets, right?
Obviously,
some of them
can,
yes, you know, be
it comes with
securities,
it, yeah.
some are commodities, so that needs some further guidance from regulators as well.
And that's
right?
the second thing, yeah. So first one, pay taxes, because we know what happened to Al Capone. And the second one is standardize, to actually explain what it is, how you can use it. Is it money laundering? Is it financing terrorism? If yes, then how you can protect, you know, yourself from doing that. Also, you know, because we had cases when special forces came to the offices of the guys who deal with the crypto, and they say you're doing the terrorist financing. And obviously they couldn't prove that, but the guys who deal with it, they couldn't prove the reverse. So we need to standardize, explain what the Bitcoin is, what the cryptocurrency is, what's the token, what's the blockchain. And this is already in the law. And the reason why we need that is, again, because we live in the real world where we have GDPR, where we have PCI DSS, where we have the Basel, we have banks which are heavily regulated. And when you exit from crypto into the fiat money, namely dollars, euros, pounds, hryvnias, you're already applicable to the laws which operate here and now. And we need to know how the exchanges should operate. I own the exchange, so I need to know how I can come to the bank and how we can deal the AML with the AML KYC procedure, so we don't break any laws and we don't have any, you know, surprises from the special forces. So that's the reason why we need the law.
But let me ask you. I mean, if you have open source software and there is a bug in the code, who is responsible? Who do you go after if you've suffered a loss?
That's the whole point. I mean, I keep my reserves in Bitcoin. If Bitcoin falls, that's my fault. I don't go to central bank, you know, telling them, give me my money back. That's the whole point.
Of course, you're investing in an asset. My point was about bugs in the code and open source software. I mean, who?
That's your risk.
This is why, again, we're coming back to what is the origination of all of us here in this panel. So money likes the silence. And I do like when my customers dealing with huge amounts of money, because this is their core business, I want them to be confident in my solutions that I deliver in my company. So this is why I do need the regulations for the technology. And this is why we do have the deep expertise in defining what is the, you know, the feasibility study for the technology that we choose for the solution that they want us to develop. So this is not only, so Bitcoin is not a technology. I mean, this is not, so the Bitcoin is an asset, right? So, and blockchain is a technology. So we don't have to mix these things. So if we do have EBRD, BBVA, Credit Suisse, Deutsche Bank, whatever, they want to touch something based on the DLT, distributed ledger. So they do have to have the confidence that it is regulated properly, that solutions that will be developed based on this technology would be secure, and that their customers, the customers of our customers, would feel confident using their solutions, because this is the only way for financial services clients, I mean companies, to be present at the market, because we don't want our money to be managed by people who deal with technologies that we or they even don't trust. So the regulations definitely has to be in-house, and it has to be in-house in every of the countries that are, you know, at any kind of the way using this technology. So yeah, so this is it. So we don't play those games. We deliver the trustful solutions, and we develop the trustful product, and we deliver that to our customers, and we want them to feel confident.
Very good point. And this is exactly the reason why we don't see blockchain solutions in the real world. Because, no, we don't. The reason for that is because you're waiting for some kind of regulation. You're trying to protect your clients, and your clients are big enterprises. And those guys are waiting for the compliance or something like that. And the Bitcoin came from no one. Ethereum came from the guy who's 19 years old, who can't even, speak properly because he is so ingenious. All the blockchains came from people who are not in the corporate, they're not in the government, they don't have capital and they don't have power. And the reason why we don't see blockchain develop, blockchain real applications in the world, because the people who develop this project, they're free, but they don't have money and they don't have power. But we're changing that.
Poor Intel, poor Cisco guy. Wow, 4 billion invested into developing the blockchain environment. This is not the
invested into enterprise solutions, and we're talking about not the enterprise solutions. We're talking about the people. We're not talking about the corporations. That's the whole thing.
I think we talk about here a libertarian perspective and other perspectives, and I think it's a bit political discussion getting on. What I'd like to say, that's the key main thing behind blockchain or DLT or Bitcoin was decentralization. We don't want to go into the depths of the libertarians, and it's a great community and it has its life. Then we have corporate community where it has its life. We have FTSE, we have Standard & Poor's and other big indexes which incorporate that big community. So what I'm trying to say here, both worlds can exist, and Bitcoin didn't just emerge out of the blue. It started back in the 1960s, 1970s, where the big data started as well. And it has been invented by scientists, cryptographers. So no, it's not new technology. It has its own roots and it's quite a long history of development. It just was triggered by the lack of trust, lack of transparency, massive crises, and I'm sure that we'll see evolution of this technology and incorporation it into the policy frameworks. And I just came back from the OECD Blockchain Policy Forum, which gathered together largest amount of community, and so far we have more than 6 countries right now which have very advanced policy frameworks working towards incorporation of DLT, blockchain, and of course looking into the crypto world and regulation. And Bank of England itself and England will be coming with a regulation for the cryptos next year and ICOs to regulate it in the proper way, so we don't see blood again in the ICO world and lack of transparency and trust. And so far we can have a look at the 6 jurisdictions, including Canada, Malta, Estonia and a few others, and see how they're advancing their policy frameworks in terms of blockchain, DLT and crypto.
Okay, thank you. Let's take some questions from the floor. Yeah. Oh, do we have REMME? Yeah, microphone. If you can introduce yourself, perhaps, yeah.
Hi, it's Natalia Johnson, Vasant Capital Limited. Very interesting discussion, very entertaining / educational. I love a lot phrases about living in parallel world, you know, being in a present world as well. So my sort of comment will be, what can be done, or question, what can be done to actually, in pragmatic terms, make blockchain more usable in daily life in finance, given that we're talking about fintech, and also very, very big agreement with a statement that why we don't have blockchain used in real life much more than it is used. Lack of education, intensity of education on a subject, and definitely we have different interests. We have finance, which becomes increasingly regulated, and we have tech world, which absolutely love freedom, and you have to marry these two to make the best couple, I think so. And I don't know whether something can be done. I think it's a suggestion to brainstorm, because I think it's not as easy as it may sound.
The easy answer to that question would be, could the people who said that they ever used the crypto wallet, raise your hands again, please? Okay. The answer, the question to these people, what would you prefer, to use the banking system or use the crypto wallet for your daily lives in terms of ease of use? Who would prefer banks? Raise your hands. Okay, and who would prefer crypto? Here we go, half-half. So the reason, the answer to your question would be, most of the people here never used the crypto, so they know what it is and how cool it is and how easy it is. And younger people, once they use the crypto wallet, so basically all you need is the phone. You don't have to go to a bank. You just, need a few minutes to install the wallet, and you're already connected to the world, the financial world, crypto world. And they just need to use it, start using it. And from other point of view, we need more entrepreneurs who would invest into this sphere, and invest not in the corporate like IBM, Hyperledger, invest into the smaller team. So hackathons, everything which is happening. That's why I said that it's just a matter of time until we'll have the money and the power, and we'll change the world. Okay.
I think I represent quite a
majority,
a lot
yes.
of people, right? Working in a corporate finance for, I think, nearly 15 years now, I think I increasingly became very careful in terms of what application I use, when I use. By nature, I am, I would observe, I wouldn't immediately jump on a new technology. I don't even use Facebook. I hope it tells something to you. I'm in definite minority. So what I want reassurance. I'm going to use it, and it's safe. I don't have negative after events once I use. So for me, I need reassurance, it's safe. I absolutely agree with you. It can be super easy to use. Big competition to financial world, to banking. Again, in banking, you would have a lot of people who would not want blockchain to emerge for different commercial reasons. Because you may tap into their market share. But what I think, education, if I can sum up my statement with one word, I want to be educated by knowledgeable people who can deliver to me message in a very simple way, because I am financier, but I am not tech person in my heart.
I understand. May I ask you, you live in UK?
Yes.
That's the reason why you didn't need the blockchain, you didn't need the crypto, because you have working banking system. Everything works here, It's innovative, you have Apple Pay, Google Pay, wherever. Everything just works, tap and pay. In my country and all the developing countries, there is no real banking system. Banks fall, in the last 2 years, half of the banking system disappeared in Ukraine. Look at Argentina. Look at South Africa, look at India, all these countries. That's where the blockchain and Bitcoin revolution is happening. And then it will come here. And the reason why, half of the audience answered they prefer the banking system, because it works. In my country, it doesn't work.
And I think we have population of at least 2 billion that would require this solution to work. Thank you. In general.
Just a few, do we have any other questions before lunch?
But thank you.
Yes, no? Yeah.
Yeah, I just wanted to make a small comment. I would disagree with this message that the Ukrainian banking system doesn't work. I think that during the last year, I think we have removed all the unhealthy banks. Absolutely. And now it's working much better. And already there are a couple of banks which support Apple Pay. We have a great Monobank, which is a really innovative bank. Absolutely. So I think it's worked pretty well. Yes. Thank you.
Just one bank. One bank.
Okay.
As well. If we talk about the unbanked society in the world, it needs to be banked. And the problem there is not in banking. The problem there is no digital identities. There are no identities. First of all, we're talking about the problem of identities. There are no passports. It was very difficult. So there are mobile payments coming, and it's just a situation of the markets. And so we can see Revolut coming. We can see Monzo is coming. We can see a lot of digital banks are coming. So I'm not talking about the big ING or other banks who are trying to be the top digital banks. in the world. But we're talking about a small digital banking applications, purely digital on, and they're expanding and they're already working. We can see cross-border currency FX hedging. We have payment systems working in place. It's tough, but it's getting there.
Any other questions from the audience? Okay, just to, we need, okay.
Let's see that the manager says, yeah.
Okay, so just to wrap up, if each of you could say, in closure, just 1 minute, in your opinion, what impact will blockchain-enabled decentralization have on traditional business models and governments? Would you like to start?
I would like to finish if you don't mind.
All right, then let's start from Anna.
Ladies.
Blockchain is a catalyst of change. It's gonna here to stay and help to bring the new business models. Finally, we've been talking about the circular economy and sustainability and resilience. They became very buzzwords, especially with the climate change and especially with growth of the population and catastrophic disasters happening right now because of that. So it triggered a lot of changes, and that's great. And fortunately, unfortunately, those crises which we had recently, 2008, and anticipated right now coming in the next year or two, will trigger more decentralized models, will trigger more top-down and bottom-up re-engineering of the models and combination of those. And I think blockchain will help to bring trust, transparency, but also will be a catalyst of change in terms of the policy frameworks, in terms of the governance, in terms of the business operations, and we'll see more use of applications of the not non-linear traditional business approaches, but circular one and shared ones.
Antonina, impact on traditional players.
Yeah, so 2 dimensions. The answer we'll have two parts. The first one is that the impact is huge, and the technology is already here. It is already in your life, even though you don't imagine that. So we do have a lot of use cases already implemented in a lot of industries, working products. The main comment from this user part, us as those who would be using this product based on this technology. If you bother about what is the technology and you feel this is an obstacle for you, about this technology as a part of the solution that you use, then this solution is developed in a wrong way. From the user experience perspective, you don't have to have a clue what is the technology based on, that the product is developed based on, that you use. And the other part, so this is absolutely okay that you as a business, if you are holding a business, you are part of a huge financial company or organization, and you don't still have something with blockchain, this is okay. This is not a problem. There is no rocket science. If you want to touch something based on this technology, just come up and you will have the research based on that, or you just be requesting an overview of the market. Like we have such requests from the very huge market players who just have nothing at the moment, nothing with blockchain in their business, because they are okay. Don't touch it if it is working, and this is okay. So this is, this fear of missing out something is not absolutely, this is unapplicable to feel. Just if you don't have anything with blockchain, this is okay. Just if you want to have something with it, okay, come up, and we will provide you, whoever will provide you the research or survey or some maybe feasibility study for your business case that you want to validate whether you should go and proceed with blockchain for it or no. So this is absolutely okay. If you do have the solution based on blockchain already, you are not a laggard, you're already the one who is in front of everyone, this is again okay. You can revalidate and just stress tested, assess it from the security or architecture perspective. This is again okay. So blockchain is here for you as a user, as a very end user of any products. And blockchain is here for you as an enterprise. And blockchain is here for you as a researcher. And blockchain is here for you as that guy who will be developing these solutions. So this is a technology, and this is already here. And this is it.
Andrei.
I think blockchain is definitely here to stay, and it definitely has adoption. I think that what I've been thinking about is just sort of not whether blockchain, but what's after blockchain, right? What is it in the evolutionary development of in this way, in the digital space, what is it going to lead to? And there are obviously possibilities here, so I would be speculating a bit. But I think what I see happening and what is interesting is that multiple domain-specific sort of flow-based modeling languages being developed, that is very interesting. It's again moving into different dialects that solve particular solutions, and seeing this diversity is very, very positive. Seeing this experimentation is positive. So one of those is going to become dominant at some point in the future, but you don't know which one. So you have to experiment first before you can. We all speak English here, right? It's a dominant language for sharing ideas for us in this room. It became dominant after a period of time for a variety of historical accidents. But nevertheless, it's the case. But before you sort of experiment with it, you don't know which one it's going to be. It could have been Chinese, it could have been Portuguese, it could have been Latin, whatever, right? So, but typically it will be brought on the back of something that this technology is able to solve. And I think it does solve the problem of digital scarcity. And that fundamentally is valuable, as just valuable. So I think I'm seeing a lot of experimentation in modeling languages, and that's very positive.
Alex?
Bitcoin is only one real store of value right now. After 100 years of fake money, we now have a real store of value, and we'll have a source of trust that could be used in various industries, and world's face will change in next 2 years significantly. And Ukraine, it is great that Ukraine, one of the leader of these things in the world, these trends.
And finally, Michael.
I would say disruption is the key word. Disruption, especially in the monopolistic markets, which were created by regulation. And we're going to see a lot of changes there.
Okay, great. Well, thank you very much for this stimulating discussion. We can continue over lunch. So thank you.